It's quarterly season, and let's get right into the breakdown. Over 1,000 companies reported as of the latest February announcements. 41% of them experienced a drop in profits. Nearly 30% are loss-making, and not even a fifth are paying dividends. Less than 4% record high revenues and earnings growth. Too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description.
Yeah, and over here you can see that there's only 4 companies that delivered more than EPS current dividend rate, which is about 6.3%. And these companies are Timecom, Amway, APM, and FPI. Some of them are mostly distributed based on their operation. Some of them are based on their disposal. So if you want to know what companies are they, you can check out some of the announcement or just read out some of the quarterlies. But anyway, this is the analyst's overall view on the fourth quarter 2024's report card. Basically, they say that about 30% of the companies, they are underperformed, whereas only 18% outperform based on their expectation. And then the remaining is just remain unchanged. So there's a lot of underperformers in the current market. That's why also you see that the market has been very volatile and it's going down also because companies are not giving out the numbers that they want. Okay, so there's actually 5 interesting things about the quarterlies over the 1,053 companies that we see. So number 1 over here, it is revenue boost. You can see this company, we covered Edeltech during their IPO. You can watch the video if you want to at the corner. But anyway, you can see that there's a big jump in terms of revenue in just one quarter from 4.9 million to 27 million. So that's about like a 6 times jump. But if you look at their share price year to date, it's tumbled 22% or 23%. The reason why it went down is obviously because of the sentiment. Right now, the tech guys are not really doing well. And also because Edeltech is related to the ATE and also somewhat to the PCB kind of like industry or OSAT. That's why they're also getting hampered. But if you look at their revenue breakdown, right, you can see that most of the contributions are coming from Singapore. You can see that last quarter, they are making about 800,000 in terms of revenue. Now it's about 20 million. And then you also can notice that in terms of their business activities, the CNT, which is related to this refurbishment of IC and also test consumers, that one is the one that is increasing a lot. Basically, what it means is that they are getting more repair job for this IC assembly and testing only. It's quite a for back end kind of like business. That's why you notice that their margins also is not so high. Previously, the last quarter, they have about 11% because I think they sold some of the ATE machines. So the ATE one is the one that's commanding a lot of margins, whereas for these repair services, it's a very low margin job. So that's why you can see the profit also drop a lot. Second one, this one I think I've never seen this before. Negative revenue. Have you seen a company that announced a negative revenue?
Long time ago, but it rarely happens.
Yeah. So this company, Zicon, is a micro cap company. Year to date is still doing fine. But you notice that their revenue actually recorded like a negative 77 million, but they are making
Did they just put what should be a cost into the revenue segment? I'm guessing.
So we'll go through over here. Basically what they say is that they, because of this new accounting standard compliance, which is this IFRIC 12, for the past results where they recorded the revenue, I think they recorded it, they didn't follow this. So write it down, they need to adjust and everything. So the revenue recognition cannot be realized for this particular quarter. That's why they straight away just negative out everything. But funny thing is that the reason why they can make profit is because there is some sort of like a gain on fair value of investment properties. So basically they just revalued their investment properties. That's why they are making like a paper gain. That's about it. But yeah, and also another interesting thing is that they have this project which is under a defect liability period, which means they are not really receiving any money yet because there are some parts that they need to fix. So also I think that is the one of the reason also why it contributed to the negative in revenue or maybe less profit than expected. But anyhow, yeah, this one is a very interesting phenomena that happened when I first analyzing this company. But yeah, negative revenue. So the third one, business change. So this company, Capital A, if you notice, number 1, share price obviously tumbled about 15%. Number 2, that is interesting is you notice quarter on quarter, usually they make about 2 to 5 billion, but right now they're making about 400 million only. So why revenues tumbled so many, right? Is because they have been reducing a lot of these asset which is related to the aircraft. Yeah, so basically, if you guys didn't know, they are disposing of or injecting their capital or the airline business into AAX. So that's why you are seeing they are doing this kind of like accounting adjustment in this quarter. So that's why you notice that liabilities, asset, they all had a huge drop, like from 5 billion to zero, essentially. And they are going to become like a software business, which is over here. You can see they have your ADE, Teleport, AirAsia Move, Santan, Big Pay, and others. So far, the only three business segment that is making profit, it is ADE, AirAsia Move, and also Santan. So ADE, I think this one is going to be the cash cow because this is more on the maintenance for the airline. So
Move is not bad as well.
Yeah,
right?
Move is actually it's actually also not
but
bad.
I think like in terms of future AD, I mean they plan to double capacity, right?
Yep, exactly. So Capital A is transitioning to become a software company instead of an airline. The fourth one, Deep Value. Okay, this one actually we came across this one because one of our viewers in the live session mentioned about Lei Hong. So he said that Lei Hong's profit is actually improving a lot, but then their share price didn't really budge. So if you see, right, over the years, profit actually grew like double digits, 10 to 20%. Not only just Lei Hong, Leong Hub, and also LTKM. If you guys didn't know, this one is related to the poultry industry, the eggs and also the chicken. So the reason why they posted such a good result is because the selling prices for their products obviously increases. Everything looks good, but then you can see that their share price didn't really budge. If you stretch it out, max, right? The highest for Lei Hong, they went up was around like 1 ringgit each, and that is in 2018. So if you look at 2018's figure, right, you can see that the profit and revenue difference is also like, profit is better, but revenue is about the same. And this is only 3 quarters only. They haven't posted full year yet. So this kind of show like there's some sort of like a deep value discovery lah. Like why is this company trading at 2 times, 5 times?
Yeah, that's crazy, right?
Yeah. And their profits are improving. So probably in order to attract more investors, I think they need to do some shareholder value, maybe like distribute out dividends. I think that should be key. So if let's say they can increase their dividend payout, I think this company probably is worth checking out. Last but not least, we have a record high earnings for this quarter. So there's actually a couple. I think there's about like 30 to 40 each company that reported that. But we're only just going to show 4. That is Frontcan, InnoPrice are related to palm oil. NationGate, this one is related to their AI server. They help to do some sort of like box build for NVIDIA. And last but not least is Guangzhou. Guangzhou is because obviously we got talk about it in our previous video. You can watch it. Basically, right now the cocoa price has increased a lot because there's a shortage about it of the cocoa beans. That's why they managed to take advantage and capitalize on the shortage. So a few record high companies. Final thoughts is that since the analyst thinks that the results are underperformed, would there be more crashes ahead? What do you think about it?
Well, crashes in terms of
more weakness ahead for the companies in Bursa in general.
Oh wow, it's very hard to predict the future, but I always like to tell people to not try to predict, but to assume. So you assume that it will happen, and then you make your preparations accordingly. Because if you try to predict, then first of all, it's so difficult already. Secondly, it really gets you nowhere, because that I think that's whenever we go in the stock market, it's always about probabilities, right? What do you do if this happens? What do you do if that happens? So I think that's the approach. Assume.
Okay, so assume that there's some crashes, but definitely this one, the remain 2025 is going to be volatile because on the 4th of March, I think Trump is going to implement the tariff on Mexico and Canada and also China, if I'm not mistaken. Tariff is one. Another thing is also related to the war between the Ukraine. I mean, there's some sort of discussion, if you guys didn't know. There's some sort of like a drama between them again. But so far 2025, there has been quite a number of uncertainty. So expect a volatile market. So far, there's no sign of recovery. So make sure to maybe increase some of your cash position, or if you find companies that has tumbled a lot and you find it interesting, maybe that is the time to nibble a little bit. So the second question that most people will ask is the next best opportunity. I think the next best opportunity, this one lies on dividend payout. I still feel that is the way to go.
Yeah.
Because during volatile times, people want some sort of comfort.
Then
and they
we
want to stay.
recently what SC's chairman has been promoting, right?
Yes, exactly. And also, yeah, as the SC chairman, he said that he wants to reduce the underperformers or basically companies that cannot generate returns over the past 3 to 5 years. And also, he emphasized on paying out more dividends and do share buyback, which is good. But so far, it's only in discussion and proposal stage only. But if it's implemented, I think that will be the next catalyst for Bursa Malaysia. So yeah, make sure to watch out if, let's say, these kind of things happen, and you may want to revisit companies that has a lot of cash and they didn't really pay out a lot of dividends, because probably they are forced to do it lah. But yeah, that is so far for today's video, and this is our February 2025
We're
update.
down, but a bit.
Yes,
Not too bad.
yeah, not too bad actually. 41.9%. I think previously was around 45 to 46, down a little bit. But the good thing is that our Fire Pro Global right now
Yep,
is
it's going
up
up.
a lot. Yeah, this one is a good sign. We are kind of like riding on the China and also Hong Kong wave. That's why it is going up. Boring portfolio also has been taken a slight beating. Last time was around 11%, now is 9%. But nevertheless, it's still like making money lah. But if you want to know more how we do our write-ups, you want to get some information fast on some of the management updates and also some of the analyst briefing that some of you guys cannot attend to. So usually we will share this with our Fire Pro member, and everything is inside this the Fire Pro program. And yeah, if you want to know what are the companies behind this list over here, you can check it out inside Fire Pro. The 10% coupon will be in the description and also comments. And also, if you are a dividend investor, we have a boring portfolio for you to reference to see which company distributes dividends consistently. So yeah, here are the lists, and you can check it out over there. If you want to see how we do our write-ups, we have a free sample for you. And on top of it, we also do share some management notes over there, so that just to let you guys have a feel on how we take notes where we meet management, and also what are the insights that we get. And then you can maybe even cross-check whether is it available on the public, or is it like exclusive, right? So yeah, you can check it out in the free sample. The links also will be in the description and comments. So yeah, that's about it for today's video. See you guys the next time.